Today, I'm going to be exposing the top 5 secrets that financial advisors do not want you to know. Now, you might be surprised to learn that they've got some tricks up their sleeves and things that they don't want you to know, or you might not. But either way, I've got your back. Let's jump into today's video and discuss these 5 points. Now, for secret number 1, imagine you're on a road trip to grow your money. You have a financial advisor and your financial advisor steps on the gas. It's churning time. But what's churning all about? Churning is like driving in circles, except you're not really getting anywhere, you're not going anywhere, but it's making your advisor a ton of money. They may suggest frequently selling and buying investments, but here's the catch, because the more transactions you make, the more they're stood to make based off of their commissions, but that doesn't necessarily translate into profit for you. So slam the brakes on this churning chaos, because just like how longer road trips are more fruitful when you usually get there, the same goes for investing, especially for beginners. Secret number 2 then, their fees. Oh yeah. They're like a sneaky little creature that likes to play hide and seek, and just when you think you know all of them, you don't. When you invest, there are various fees to consider: advisory fees, management fees, and expense ratios. All of these are going to eat into your profits. And some advisors don't openly discuss these, leaving you in the dark on how much it's going to actually cost you to make these investments. And something that financial advisors don't really like their clients to know is that it doesn't matter the size of the client's portfolio, whether you invest in $10,000, £10,000, or $100,000, £100,000, the amount of work that the advisor needs to put in to give you good advice is pretty much the same. It doesn't matter how much you're investing. So make sure you strap on some fee-finding goggles and say goodbye to those fee fiascos. Fee fiascos? Fee fiascos. Secret number 3 then is exclusive investment mysteries. Sounds good, right? But if it sounds too good to be true, well, it probably is. Now, some advisors may try to entice you with these exclusive investments, claiming that they know the secret to success. But remember, not all that glitter is gold. Exclusive doesn't always mean better, and an exclusive deal may be limited to a specific fund or a specific brokerage that advisor might be working for. So there are benefits to him for pushing those basically investments onto you. So always take advice with a pinch of salt, and remember that the advisors are there to make money for themselves and their bosses as well. Secret number 4 then, the market magician. Abracadabra. Timing the market, a trick as old as time itself. This is when advisors try to predict the best time to buy and sell investments based on short-term trends. Sounds good, right? But here's the catch. Even the pros find it basically impossible to time the market. It's like trying to watch or catch a shooting star. Instead, focus on a long-term strategy and invest consistently over time. A prime example is the dot-com bubble back in the late 90s, when the technology sector experienced a massive surge in stock prices. Now, this was fueled by the dot-com boom, and many investors were trying to time the market by buying these tech stocks at their peak, expecting them to go up even further. But in the early 2000s, it all came tumbling down. There was a significant market crash and a lot of investors suffered significant losses. And that brings me on to secret number 5, that you can actually invest by yourself. Most people think that it's very complicated, and the actual process of doing a trade and investing is so complicated, right? Maybe you have to have your own multiple brokers for different financial products, so a different one for stocks, a different one for mutual funds, and a different one for bonds. It can all just be so complicated. But is it? Well, the answer to that is no. The physical implementation of actually buying a stock and investing couldn't be easier these days. There's an abundance of free online educational resources, as well as user-friendly platforms on your phone that you can use to invest as little as £1. My favorite app right now is Trading 212. You can check out this video. It talks you through all the different steps of Trading 1-2, how to set it up, and how to actually go through and buy a stock. And if you click the link down in the description, you'll get a free stock worth up to £100 if you sign up. So yeah, don't let your knowledge or your confidence hold you back. Learning the basics of investing and figuring out your risk tolerance can get you a long way in building your wealth independently. Now, I've mentioned this a few times throughout this video, but honestly, the long-term game is the real winner. Some advisors may play the short-term game and focus on short-term gains, but the truth is that investing with a long-term perspective is way less risky and more likely to bring you higher returns in the future. It's like planting a tree that grows over time. Stick to a well-diversified, long-term strategy that's going to see your money flourish into the future. And there you have it, guys, the financial advisor's secrets laid bare. Remember, it's essential to be informed and empowered when managing and thinking about what to do with your money. So next time you consider meeting up or hiring a financial advisor, you'll be armed with this knowledge and ready to tackle any tricks that he may pull out of his sleeve. If you've had a blast uncovering these secrets, please give us a thumbs up, hit subscribe, and as always, keep the cash rolling and the good times a strolling. Keep the cash rolling. Good time strolling.
Yeah.